All right, hello people. Market up a little bit today on some China trade war news. Apparently, they're going to be coming to the U.S. a little bit later this month to start discussing stuff. So that's pretty good. Pretty good, pretty good. Actually, yesterday wasn't too bad. If we take a look at yesterday's bar, if you recall, we opened really low, and we kind of actually we opened. Maybe rephrase that. We opened here, opened right about there, and then we actually closed a little bit lower. So, but we did retrace quite a bit of that amount during the live session, and there's a lot of volume traded. There's the biggest volume since we had this candle over here, which is a pretty good topping candle there, pretty good topping candle here. But as we've seen in the past, rising on low volume and falling on higher volume maybe don't go higher in the long run. You can see there's actually not too many days with massive green accumulation. Here's two, but they're kind of few and far between. You don't get that many on indexes. Also, institutions are very, very good at buying bottoms. That's kind of that's their role in the marketplace. You can see even all these at about the 5,700 level have these big spikes. There's a few green spikes in here too, but a majority of them are red. And here we are at 7,400, really without seeing too many huge green spikes. We did see a few green spikes here, a few green spikes here, so not as healthy as that market, but definitely not breaking down, which is good. Still above the 50-day. Futures today moving up, and that's kind of pretty much all you can expect from an index. So going to go through IBD here, just kind of see what their take is on the market this morning. See what news is coming out. Check out our, going to go to our earnings. What's up, Blah? I don't think we're at a bubble. People tend to get lost within these terms and these names, and it doesn't really matter, to be honest with you. But no, I don't think we're in a bubble. There's nothing bubble-ish about this. So what a bubble implies that you're in a market that is overexcitable, okay, and it's been that way for a while, and it sometimes continues for X amount of time. No one knows exactly how long that lasts. Bitcoin obviously was in a bubble. If you found me from my real crypto channel, I did a video called "Are We in a Bubble?" and it said yes, but who cares? was the end result of that video. But no, we're not in a bubble. So if you go through the past two actual bubbles we've had, where we had about a 50% decline in stocks. The first one was 2000. The second one was 2008. Okay, and we know what caused those bubbles. Number one was the dot-com bubble, and number two was the housing bubble. Well, if you talk to anyone that looks at macroeconomics, there's nothing bubble-ish about this. The housing market is robust yet healthy. Okay, there's nothing bubble-ish about it. There's no we don't have any major subprime mortgages. We've just kind of reverted to the mean in terms of the housing market and inflation. I mean, houses came down so far, and I don't think we really went into a deflationary environment, in the economy. We never went into a deflationary environment. So we never really, while we did outstrip on the way up and on the way down, I think we've kind of reverted to the mean and caught gains that we probably could have had normalized for the past 10 years. In fact, there are some graphs about housing prices basically stating exactly that now that I think about it. If you plot normalized housing prices, see if I can find it. But the whole point of the matter is that there's nothing here saying that we're really in a bubble. The economy, the U.S. economic growth is great. The unemployment is great. I mean, there's really nothing. You could argue that some individual stocks are probably a little overvalued, but that's fairly normal. and could we be do a correction? So there's basically two types of corrections. There's um, there's a correction and there's a bear market. A correction is anything around 15%. A bear market is anything over 20%. Those are kind of the two defining factors. And then I guess if you go over 40%, it's a correction. There hasn't been a well defined strategy on that. Um, Mentioned subprime auto loans and or school loan. So that would be so here's the thing about some of those. Number one, you can't default on a school loan. It's they don't let you do that, especially if it's backed by a government agency, which 99% of them are. You can't default on a school loan, so it's not like you can declare bankruptcy. What that can do is put a big drag on the economy. Like if you think about it, with the dot-com bubble, you literally just sold everything you owned in the stock market, and then that kind of preceded what was to come. In 2007, 2008, you would default on your home. And that's really bad to default on the largest asset. What's up, Dimitri? Defaulting on the largest asset that you own is pretty bad. It puts you in a bad place personally, and so many people did it that it put the country in a bad place economically, which caused the overall recession that we had. And that was real. School loans, because you can't default on them, it just puts you in a really shitty place. Okay? There's no, and keep in mind, those were kind of events. The country can't default on a student loan. It can't be an event. There's no event from that. The stock market kind of runs on those events, if you will. In terms of subprime car loans, I haven't heard too much about that, but I do see the deals on television. Let me Google that. Subprime car loan crisis. Let's see what we find, because I've actually never done any research on this. April. Okay, let's check this out. This could be something. This is usually the second most expensive thing that people take loans out on. Show me a graph. There we go. Yeah, so that's an interesting little graph there. Yeah, so it looks like we were going on an uptrend there, and we've just kind of it's done that reversion to the mean again, where people are buying more new cars. Which, by the way, if you want to make be wealthy in life, don't ever buy a new car. Fitch subprime auto annualized net loss. So this is probably something to note. Definitely, I think. Can it tank the economy? I don't know about that. See if they have any more good graph data down there. Doesn't look like it. And yeah, I don't think you're going to be seeing decline in auto prices due to that. So crisis era milestone. Ooh. See, I also believe there's always going to be something. Oh, I'm not a professional service subscriber, nor do I really want to be. There's always going to be something that's out of whack in the economy, and I think you don't have to overreact. And while I think this probably is important, I'm happy you told me about it. Thank you very much. Um, I think at the same time, there's always something that's overinflated in the market, and this is just the latest thing. I mean, like you can overtly see how a housing crisis can affect the stock market, or just affect the economy, affect people, right? It can affect people. I don't know how an auto loan crisis can really affect people. Yeah, people will find a way to work. You can go ahead. You can go buy a cheap car. You can go online right now, buy a car for 2 grand. Go to a used lot, buy one for 6 grand with a loan. So while it is interesting, I don't believe it's very pertinent to overall what's going on in the economy right now. That's just kind of my take on it. I think it's something to note, but I don't think it's not the first thing. That's not going to be the impetus to kind of tank the economy. There's always going to be things that are overvalued and undervalued. So yeah, I'm familiar with that, but that's because of the borrower. I've back in the day I took a 20% interest loan on a very small loan. It was I think like $2,500 in early 2000s or something like that. It was a really really small loan. Paid it off fairly quickly. I mean, I'm decent with my money. But your average mom and pop isn't going to fall for those predatory loan tactics. Not your average person. They fall for the tactics at large dealerships, and unfortunately, get screwed that way. So your average Joe is going to get screwed by a car dealer, no matter which way they slice it, and that's just the way it is. But I don't think it really changes the economy. Now, your mom and pop owning 4 houses in Florida, I think that can affect more things than owning a too big of an F-250 for their $40,000 a year job. It'll affect them individually, but I don't think it's a systemic thing. Um, anyway, but the whole point, and you do say something there that's interesting. I'm very tentative because of the last crash. There's always a recency bias in the market too. Okay, and hopefully I can maybe help you out with that. Um, Let me set my chart up here. As an investor, as a trader, you can't have that recency bias. It's a killer. So this is the Nasdaq. Nasdaq actually topped in 2000, and when it crashed in 2007, 2008, notice it wasn't even close to halfway to the top. Well, I guess it was close, but it's about 10% to the top, to the halfway mark, excuse me. And then the crash took us lower. Um, that potential recency bias has cost you a tremendous amount of capital right there. That's a tremendous run from 2013. I'm not sure what kind of investor you are, if you're a longer term investor, if you're a shorter term investor, if you're a trader, whatever it is, but you cannot let that recency bias get to you. Okay, I'm going to pull up another chart. There's a specific one I'm looking for. I'm looking for. Here it is. What if there's a better resolution version of that chart? I like the chart, but the resolution is always garbage. Oh. Looks like a lot of people have resaved that chart just in crappy resolution. Alright, let's pull it up anyway. Yeah, this is probably one of the best charts of all time. Oh, very new overall. Okay. All right. I was looking in the other. Oh, that's not it. All right, I'll just download it again. So here is a chart of the Dow Jones Industrial Average going back pre 1900. Okay, you can kind of take it in there if you want to. I'll put a, if you want to look at this closer later, I'll put a link in the chat here for you. So this right here goes through major news events, kind of very, very, very major news events. And one thing to notice is that there's really only been one time, maybe two times in history where the market has really chopped you around for like a decade plus. You know, there's a kind of a 19 time here, or 19-year time here, and a 16-year time here. And I'm not including this or this because this didn't really chop you around. It did for a little bit here. This maybe, looks like this was about 10 years or so, maybe 12, but this is actually a cup with handle if you look at it. There's a little cup with handle here too. Now, in some point in time, are we going to do something like this in the future? I think so. Market cycles do tend to repeat themselves, and I actually didn't think about this till now, but I've been likening us to this market cycle, which would lead us to this market cycle. So, is there a point where we're going to chop around? I absolutely do think at some point in time we're going to do this, but I don't think it's today. And I think if you kind of learn to time the markets and kind of read the economy as a whole, it's called macroeconomics. If you kind of learn about those macroeconomics, then you can save yourself a bunch of headache. Like if it's a very uncertain time globally, like think about the 1970s into the 1980s. Let's see if we can. So the great inflation begins. There was a big inflationary environment throughout the 1970s. The U.S. interest rates got very high, up to like I think 19% or something like that. Don't count me on that. But it also went through a bunch of wars. We had the 6-Day War, the Tet Offensive. The Apollo moon landing doesn't really mean anything to the stock market. So another war. Wage and price controls. We went through a bunch of uncertainty. So 1973, we get involved in Vietnam. Saigon into the next couple of years. Trying to find things that would affect the market. 79, 3 Mile Island, that probably would affect the market a little bit. Iraq invades Iran, that would have affected the market. So just a big period of uncertainty throughout here, and then the big bull market starts. And you never would have known that you were going to get this big of a bull market. Pretty much, what happens is once uncertainty's over and people think we're on a good footing again, then it tends to run. And it pretty much ran up. Look at 1987. Not much of a drop there, is it? Everyone thinks about the 1987 drop, and don't get me wrong, it was crazy. But you went on to bigger and better things. And think about that 1987 recency bias. That wouldn't have done you well. Like this wasn't 1987 here. This was like there was a blip right here that was 1987. And so that would have avoided you that. So now we're at 100. We're at 12,000 on this chart. Now we're at 25,000. We're at 25,000 on the Dow. That's something that's pretty interesting. So at some point in time, we will end up having a correction of some kind. But, what's going to be the impetus to that? I have no idea. And I don't think anyone does. I don't think anybody does. I think it's interesting here on this chart they don't mention the .com crash, Y2K millennium scare. That's about it. So, get rid of your recency bias. If you see value in the market, take it. Okay? That's what you do as an investor. Your job is to spot opportunity and then to act on that opportunity. It isn't to be scared or anything like that. So, you have to learn how to read the markets, learn how to trade the markets, and then you start trading the markets. If you're new and you still want to put money, still want to begin investing, you can put money in an index fund. There's plenty of index funds. QQQ is the NASDAQ. That would basically mimic the NASDAQ. The SPY would be an index fund that you can buy. SPY, here's the Spider futures for the S&P 500. So there's all kinds of different things that you can invest in if you're not necessarily super confident in your trading skills, where you can still participate in the market, get some of the gains, and then get some education, and then try to be a better investor and try to invest in individual stocks, or maybe go into just investing in sectors if you don't have a lot of time. So, hey, what's up, Bo? Oops. Anyway, so yeah, that's kind of that. I hope that helps you out. There's a lot you can do, without being super knowledgeable, but get rid of that recency bias. And it wasn't so recent ago. It was 10 years ago. It was 10 years ago. And there's, fear can stop you from doing a lot of things, but investing shouldn't be one of them. I don't think investing should be one of them. So, are we in a situation right now where the market could roll over? Yeah, I think it could. Is it going to crash 50%? No, I don't think it will. It's not really that type of an environment. Also, you see the general declining volume on the sell side. They're getting less aggressive with their selling. Yeah, looking at index funds, and you want to find one with, very low fees, because fees can eat you up when you start dealing with managed products. All right, looks like we've got our market open, and pretty green today. Everyone liking that trade news coming out of the news, if that's a thing. Let's take a look at the movers today. Today we got Momo, we got Huya. A little bit gappy after a crazy earnings past couple of days. Huya up 4%. ADXS. Foot Locker down in the dumps a little bit here. Has earnings coming up on 8/24. That's about a week away. Yeah, a little bit over a week away. So we'll see if that gets going. See the huge gap up. Didn't do much after that. But it's really difficult to trade a stock before earnings, even if it looks really good. Like this looks pretty good so far. Got to wait for it to break, though. Baba, WGO, ZTO up today. Some of the Chinese stocks having a throwback. Ooh, YY, lots of them throwing back. YY here, ZTO. These were ones all the way at the bottom of my chart yesterday, if you remember. And Cisco is actually one of the big winners of the day today, and actually probably would be a pretty good stock to buy in on. Supporting here at the 200-day moving average, barely touching it, putting in a pretty big base, sitting right near the buy point. So 46.47 would be your technical buy point on this particular chart. You can see some high volume candles here. We got this one. This is kind of a bottoming candle. You can see it never undercut this since it happened. Big volume there. And these came to the 200-day and popped right back up. So pretty healthy price action overall. Actually blew through 2 earnings reports. Let's see what my my calculator says about this. What would 20% be from 45? $9, so it would be 54. You there, Eli? Got a few lurkers here today, which is fine. Oh, that's nice. Wow, that's a good one. That's a good one. 1, 6. Question is, can we do 20%? Lurking is where it's at. Yeah, we can do 20%. Question is, will we? So far, we're selling off here, so that's why I don't jump in right away. I want to kind of wait, see what it does. Maybe it's just going to come down and fill the gap in reverse. We're only 3 minutes into the session. The first half hour again is kind of where they play their games and do their weirdness. Cron up 2% after a big 12% day yesterday. Oh. All right, nice little breakdown there in Cisco. So far, failing to get over those highs. I do like my options in terms of my options in Cisco. That's some good options there. Cores looks like it's heading a little bit lower today. It's kind of basing. Not sure why yesterday took the sales, went out of the sales, but we'll see what happens. Got Twilio up 2%, Shutterstock up 1.5%, Twitter up 1%, S&P up 0.68%, pretty good. A little bit of a gappy gap there. Of course, that's the SPY, not the ES. If you go to the ES, the futures, there's probably not a gap. NQ with the NASDAQ, you're up same 0.6%. So that's pretty good. I'm going to see what IBD has to say about Cisco's earnings. Pretty interested in Cisco's earnings here. I think it should be updated from last night. Not in a very good industry group. Sales are okay, but that hasn't really changed lately. ROE is really good. 23% ROE, 32% pre-tax margin, 3/4 of increasing fund ownership. It is a Dow component. Basically what that means is that it's a huge company, and sometimes Dow components don't really move the most because they're way too liquid. They have a lot of shares, and there's always a lot of people interested in buying and selling. It's hard to get a unidirectional move out of these things sometimes. Huya now leading the chart up 6% today. Tencent's getting wrecked. Yeah, I heard that they kind of botched earnings there. Yeah, see, a couple days ago, maybe it was you that Justin asked me, and I think we were here. And I'm like, yeah, not really interested. You know, falling out of a falling wedge like this is not usually a good thing. And you just kind of want to give it time, you know. And this is one of those reasons why. Looks like there was earnings, 8:15 unspecified Central Standard Time. Unspecified means before or after is what that's supposed to mean. Looks like it's come back so far. Oh, no, this was yesterday. I'm sorry, this is today. Yeah. Maybe it was yesterday. Yesterday or whenever someone asked me about it. Maybe it was this day. I don't know. But yeah, so not really interested in that one. Huya coming back pretty strong though. New is a new IPO, also a Chinese stock. Looks like it's at lows there. Huya at lows there. Cron doing pretty good today. It's actually sitting near my alert that I have set here for Cron. Cron not doing bad things. Noah, we like Noah. Earnings coming up, living at lows. Or is that Boeing? Okay, Boeing bouncing off the 200-day moving average, falling out of that wedge though. Betcha PKG is going to do the same thing. We sold PKG yesterday. Yep, popped right back up into the channel. Oh well. That's what you get for bottom buying. But yeah, Boeing coming back up too. Very nice. DDD Cron Roku doing pretty good here today. It's like a throwback from yesterday's little mishap. Volume not aggressive, still in line with everything. So yesterday was kind of a nothing day for Roku. You can see it climbing the ranks here. Very interested in Boeing. I actually last bought Boeing off of this base, and that worked out really, really well. If Boeing breaks out from this base, probably could be something similar. ANET. Okay, ANET looking good, but the volume, yeah, if you guys are interested in a pretty high growth name after earnings here with very tight price action, all three very good things. I would probably recommend taking a look at ANET. I got a, looks like I have an alert there at 275.07 for ANET, coming out of a pretty bullish pattern. You see right there, kind of a form of a cup with a handle. Handle's a little low in the base, so it may be a flawed base, but if it breaks out and volume is good, you could probably take advantage of something like that. Here's Hertz on top of our leaderboard today. Kind of getting close, curling up higher, looking like it wants to break out. And here's Cisco down here as well. So let's check out here on our day today. Inside day on here so far. Twilio doing good. This is my watch list. These are the ones I'm really interested in. Really like BE, although I should probably put that in the list above instead of the list below. FFIV. This one looking pretty good so far, just handling out here. Ooh, look at yesterday's day. Good thing I didn't really trade much yesterday. May have been shaken out of that. Right back in the action today. You get those days like that sometimes, guys. Like this day, started up here, came all the way back down, tested the 50-day, closed at a pretty good price point, I think. I think it rose a majority of the day. It looks like it chopped around quite a bit, then started rising towards the end there. There's the monkey business right there. And then you see the gap up. A gap up this morning here. This is a 5-minute chart on the NASDAQ. But definitely rallied towards the latter half of the day. And having a good day today. I mean, this is a good day. And FFIV being a participant in that. PKG as well. Like I said, I got shook out of PKG. I don't mind too much. Shutterstock. One I really like Shutterstock in terms of a charting basis. Its fundamentals aren't too bad either. Let me see what it says. 93% composite rating, which is pretty healthy. Sales EPS is okay. 25% growth. That's okay. It's not great. Pre-tax margin 11%. Pre-tax margin not great. ROE 13%, not great. But relative strength is 91, implying it's acting better than 91% of the stocks in the S&P 500. So may move regardless. $3 looks like a special dividend on 8/14. Is that an annual? Doesn't look like it's an annual. And BADDD. Well, looks like news topping our charts here today. Chinese stock. I think, is Momo a Chinese stock? I don't remember. Huya is a Chinese stock. And then Cisco doing pretty good here today. I like Cisco. Nova, ANET, DDD, BA. I'm not quite 15 minutes and can't get to FinViz. SSYS. These 3D printing stocks. Look at the nice volume coming here in SSYS. This is a 3D printing stock. Same with DDD, which is also up 3% today. We haven't looked at that yet. You see, remember the big gap on earnings, and then now we have a little consolidation. It's looking for higher prices. Vips is a Chinese company that's down pretty far, $7. Looks like it's making a new low bubble. This was a previous new low bubble, and now it's making a new low bubble. EC, something I've been interested in for a while. What's it doing? Not a whole lot. Earnings on 8/14, so it already had earnings, and it's kind of living a little lower there. Air Lease, what are you doing? Air Lease is interesting, but this is kind of my bias, not really willing to buy an airline. And actually, this isn't an airline. This is an air leasing company. They lease planes out, so maybe it's a slightly different business model. We can see there about a 10% popped up to recent highs. Probably will get there in time. Restoration, reminds me of Restoration Hardware. What are you doing today? Only up 0.77% after a pause, which has been due after a pretty good week and a half of rises here. CMCM, Docu looking pretty good. Replace my alert on Docu. Workday, where are you, Workday? There you are. Okay, so you ended up coming back down yesterday, and now you're going back up today. Earnings in 9/4, so a few weeks out. Yeah, about a little under 3 weeks out. Could have a move before earnings. I go long, Christian. I don't really... Well, actually, in the market, I can't short due to the fact that I do my trading in my Roth IRA. So, pretty much go long only. I have shorted in the past. I can do short, but I've just been going long. There's been no reason to short anything in this market. To be quite frank with you, like back in the day, I shorted Herbalife. That's a big one that I shorted. Never shorted VRX though. Wish I would have. Never shorted VRX. That'd have been a good one to short. Liking the action of Workday here though, coming out of this declining trend line. You know, once the market starts moving again, you're looking at these ones that are breaking out of these little bases on good volume, and just kind of starting to curl up. Usually get a little bit more aggressive. And aggressiveness is good. We got Twitter up 1%. Still loving his bear flag. Still hasn't broken yet. Still hanging out. But NASDAQ doing good. NASDAQ doing very good today. 0.47%. Pretty lazy day today. If you could have one more than the other, would you be stronger in TA, education, or experience? Well, I've been investing in stocks for like, I don't know, 17, 16 years, something like that. And I'm really good with technical analysis. At least I believe I am. At least I believe I am. It works for me. So I've been investing quite a long time, and I've been doing technical analysis quite a long time too. Really, technical analysis probably only the past 10 years, maybe. You know, and that's kind of what kept me out of trouble during the 2008 crash, is just kind of understanding the market cycles and kind of how things work. And you know, like when you see banks start to fail, keep in mind when Lehman failed, even if you weren't out by that point in time, I don't remember if I was or not, but even if you weren't out by then, you had plenty of time to get out. Lehman Brothers failed towards the top, and it continued to fall for quite some time. Like when you see banks go bankrupt in a weekend, even, you know, no one knew what was happening back then. But like if you look at the ES back in 2008, like we can probably look at when Lehman actually went bankrupt. Actually, you know what? I'm going to go back to the daily, because I'm going to go back 20 years and go back daily. Ooh, ANET hit my mark. ANET hit my mark. So yeah, here's the 2007-2008 crash, and Lehman Brothers was up here. You know what I'm saying? It and then it rolled over a tremendous amount. Let me go ahead. When did Lehman Brothers fail? September 15th, 2008. Oh. I guess it was a little lower. Okay, yeah, I was definitely out by then. I remember things differently. Wow, how your mind screws with things. September 15th. That was a weekend, so it would be... Oh, here's September. Oh, that's when things really got bad. Never mind. Yeah, I was out way before then. At a maximum, I would have been out down here somewhere. I don't remember. I wasn't as active. I didn't have nearly as big of an account as I did today. I was still working 9 to 5, so... I don't remember. Yeah, one of the big things that tips you off here is you have this nice tight action here, and then you have a series of lower highs here, 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 here. Actually, I think it was right around here where I got out of whatever positions I had. But you know, I can't say for 100% certainty. But can you make a living out of trading, and if so, how can I educate myself? It's very difficult, Christian, trading for a living. Reason being is because it's fraught with uncertainty. You may literally, in certain market conditions, go months without, like, look at 2008, you know what I'm saying? Like, there's certain market times where a lot of traders, like down here, didn't take a lot of positions because the swings were super wild. Okay, there's one big trader, very famously didn't trade for a year. So number one, it depends on your style and how you've learned to trade, and it also depends on the amount of capital you have and how much overhead you have personally. Because if you're trading your own money, you're going to have to still pay your bills with your own money, and so you basically have to have two banks of funds. You have to have one to pay your bills, and you should have a stash for like a year, depending on how much your liabilities are. But you should have a stash for like a year plus, just to pay your bills, so you don't have to worry about paying your bills in 2 or 3 months. I mean, that's really the first thing. Like, I tried trading for a living, didn't work out very well. That's not my style. Is pulling money from the market every month. Didn't work out well for me. And then I just kind of gravitated more towards swing trading, which is trading for profit over longer periods of time. So I didn't feel the pressure to sell out of a good position, or if I had a bad position, forced to sell. If it wasn't breaking my rules. Coors is a good example. Like right now, it's doing kind of interesting things. Not really, but Coors just broke out the other day. It's a profitable position for me. But if I had bills coming up in a couple of weeks, or next week, then I would feel pressure to sell this position, and I couldn't give it the time that it's due to play out. So trading for a living sounds great, and it can be great. It's very difficult though, and there's a lot that goes into it. But in terms of educating yourself, the first thing you need to do is learn technical analysis, everything from everyone. The second thing you need to do is build up your, number one, I would say pay down all your debt. Look, there's very few genius traders out there that just start trading and make tons of money. What's up? Oh, come here, Jamesy. My little boy walked in the room. Here, blow. You okay? Need a hug? No. Okay. All right, I'll see. I'll close the door, please. I'll see you in a bit. But yeah, there's very few genius traders out there that can just really get this off the bat. It's very counterintuitive, and There's very few people that can trade in all market environments and just continually make money. That's not something that, I mean, I know technical analysis in theory. I know how to do that. In practice, it's not really what I'm good at. But I think the main thing, if you want to do that, so think about it this way: if you were to not trade for 6 months, for whatever reason, because again, Christian, I'm not quite sure what your style is. Do you know what your style is? You have to ask yourself these questions. I think personally, having what's helped me be a better trader overall is, number one, I've paid off most of my debts. The only thing I have is my house. So number one thing is you pay off your debts. Okay, because this is your business. If you're going to trade for a living, your trading is a business. It's not trading for a living. It's a business. And you have to think of it like that. You have to think of it like you're selling watches or widgets. Okay, and then how much. So number one is pay off your debt. Number two is you're gonna have at least a year of living expenses. Because there may be market situations, number one, where you take a huge bath, like you just take a big loss, and you're like, oh crap, what just happened? It happens, okay? It's gonna happen. Scalping less, day trading, okay. Well, scalping is kind of a form of day trading. Anyway, we can have definition talks all day long. But yeah, like say you were playing earnings season, right? Like we've been, all this week we've been looking at big earnings movers, and what's one that moved pretty big? We had Twilio have a big pop up. Actually, I think that one gapped up pretty far. Yeah, it gapped up pretty far past Regeneron, Generac, Twitter. Anyway, darn it, I keep clicking the wrong one. Here you go, Temus. Temus is a good example. Let's say you participated in Temus, right? Like, and you scalped it up here. That's fine. You know what I mean? But you're gonna find these trades. It's gonna, it's a lot of work. It's a lot of work. Along with canopy growth until we're waiting for Canada to finalize recreational use. While you're basing your investment on a news announcement, that's always risky. Although I think in Canada it's probably likely. I think it's risky. TLRY. I don't know if this has anything to do with Canada or not, but CGC looks like it's doing pretty good things. Looks like it was supported that trend line after a weird day the other day. But yeah, Christian, I really think, number one, pay off all your debt. I probably even think pay your house off. Just that's my personal opinion from my experience. Maybe you'll have more success with a shorter term time frame strategy. Wasn't my forte. Like I said, pay off your debt, year long of living expenses. You need to also have a trading war chest, obviously. So it takes quite a bit of capital to start this business. And keep in mind, in the U.S., you have a $25,000 pattern day trader rule. Okay? And so the other thing you need to do is figure out what your return needs to be every day, every week, every month, depending on your individual strategy, what that return needs to be to pay those bills. All right? And then as soon as you have that money, you withdraw it from the market. So let's say you start with $50,000. Okay, and your bills are $5,000 a month, which is not super unreasonable. So you would need a 10% return per month to make that happen every single month. That can be hard to do. That can be pretty hard to do. There's a number of ways you can do that. There's tons of strategies. You could do all kinds of stuff, but this is the business plan that you need to lay out and you need to follow. Most business plans are kind of willy-nilly, kind of get moved along the way, but this business plan you need to have a very, very specific methodology. And also keep in mind that if you have $25,000 in your account and you take a $1,000 loss, you can no longer pattern day trade. So you need to have a big buffer there. I think at least $50,000. at a minimum, I like six figures. I'd like having over $100,000. Then you only need a 5% gain per month on that capital. And keep again, that's the entire amount of capital, and you're not going to be trading with all 50,000, all 100,000 all the time. You're going to be taking very small risks, probably 1 to 5% risks is what a lot of people teach. Smaller risks, you take very high risk reward. I mean, it's a whole thing. It's a whole thing, but um, yep. All right, there you go. That's all the advice. That's the other part I wanted to get out. What up, Eli? Yeah, smidge late. I see how it is. All right, let's go back to Cisco. What's Cisco doing? Okay, coming back pretty nicely. Volume here pretty good so far. You can see volume already over half of average volume right here. Only 30 minutes into the day, so you can extrapolate. This will be a pretty good day for Cisco. Looks like the new business segments are working well and all that jazz. So I think a buy here over, if it can get over 46 and if it can get over 46, Cisco probably will be a pretty good buy. CRISPR looks like it's popped up today. Still living in a low level. We've got Huya selling off. Momo selling off. VIPS, I can't even see it. VIPS is still up on the day, not near the week. Boeing. So PKG pulled one of these, Eli, and actually gapped up into the triangle the exact same way Boeing did. The exact same thing. Fun. So new doing okay. ANET looking good. Recently just triggered my alert. Looks like it's pulled back a little bit. Baidu, a Chinese stock, living lower. Yeah, I'm not mad at it. It's okay. Next trade, I'm not worried about it. I like the Cisco trade though. Cisco trade's pretty good. So here's Baba bouncing off of that trend line yesterday. Looks like earnings are coming up. 823 before market, so. Roku, EC, WB, Etsy. Oh yeah, Etsy holding up pretty good after that big sell down earnings. Very nice. Las Vegas Sands not happy with life. Foot Locker is making more gains. Looks like it's selling off a little bit here. So kind of a slow day in the market so far. We have the SIVB. That's interesting. What if that qualifies as a cup with handle? Going back to 6.4. About 6 weeks. It's a little shy in terms of the time scale. But it's definitely like a 3rd or 4th stage base. 1, 2, 3, 4, 5. No, looks like a pretty valid cup with handle. Failed cup breakout forms a handle here. So SIVB, Bible over 380. I'm sorry, 329, something like that. SIVB not looking bad. Kind of cruising through some of these. Holly, WGO, BCC. Looks like it's trying to cross that trend line. Volume very small so far today. Look at that little tiny green dot at the bottom of the screen on the volume. Pretty teeny tiny. Dorm breaking a level today, actually looking pretty good. Dorman products. Dorman products looking pretty interesting right here. High getting back up to 88, 12%. Looks like a pretty deep base though. 36, actually not too bad. One spike low. I'll give it a little bit of a spike low. Looks like that was on earnings. So Dorman right now kind of coming out of a low level. I'm not too mad at Dorman there. Where's no? Where'd the calculator go? Oh, there it is. Okay, so added Cisco to the watch list there, Eli, if you want to take a look at that. Yeah, Etsy's not looking bad at all. Dorm to 88. I want to see what Dorm looks like. Not great. Oh, I guess to 88 is not too bad if you go out to November. Which puts us right about there. That's still pretty aggressive for that chart. But for a regular stock buyer, Dorm looks pretty decent right there. I've been watching MVGS for a while. This broke out of a long trend line, had a series of higher lows. Have kind of been wedging up. It finally broke in a big gap, and now it's been resting in this little pennant for a while. So I used to have a position in this. I don't remember exactly where, but I got out of it more than likely at a loss as it began basing. I'm glad I did. It's been it's been basing here for 2 months. So, but it looks fairly interesting here. It looks like it's starting to curl up a little bit. Not really curling, but just kind of moving up a little bit. IRBT, iRobot. Oh, yep. We looked at this one a while ago, didn't we? And we had, yeah, it looks like it's moving out okay. Volume declining on the way up, so probably do a little bit of a pullback at some point. Yeah, I don't mind that. It's not on my list, though. Let me put it on my list. What's at the bottom of my list? Kiwi. MTZ, Casa also at the bottom of the list yesterday. BLSF down 2.34%. Okay, pulling back away from that flat top there. So, well, it may not have been a gap, Eli, but the whole point was that it pulled back into the base. And there's a small gap right there. There's the gap. It came down and filled it. It looks like, but there's a gap. It was tiny, but did pop back into the base, which was my bigger point. Maybe buy more RH. I say let it consolidate, and if it breaks out of here or pulls back, you can buy more, but I don't know if I'd buy in the middle. I mean, overall, I think it's going to get to that 164 level. Maybe even beyond. It's looking pretty good. Up 6%. That's pretty good. What's Funko doing? Funko pulling back after a pretty big outside bar the other day. Here's the 10-day. Looks like it's maybe finally actually failed the 10-day for the first time in its life. Okay, not really, but you know. Yeah, I don't think volatility is going to go down that much, Eli. I think the volatility is implied for a while. But yeah, so probably the really first break of the 10-day for Funko here after a pretty big reversal candle right there at the top. So maybe profits if you've been involved. It hasn't been a big run, but it already had a big run. So I have not seen Riot eating dirt. I believe it though. I haven't really looked at it. Back down to the 4s. Yeah. Yep, that makes sense. TTWO. All right, guys, I got to get out of here. Got to go help my kids get ready for the day. Drop them off at school. That way the market can run up while I'm out. That's kind of how this works. FleetCor. What's TBT doing? Still being nice and tight. Got my alert here on TBT in case the bond market decides to go frisky on us. What's Paycom doing? Still chilling up there? Paycom. Don't forget about these stocks, guys. There's a lot of them. Oh, Walmart. Okay, up big on earnings. There you go. Don't worry about it. That's a big gap, though. Man, 10% on Walmart's pretty big. That's pretty big. That's not a stock I would trade, though. Not especially not before earnings. I mean, must be doing good in online sales. I know you were in that. Question is, do you have enough? Ooh, Apple all-time highs, 212. 212 for Apple. What's Amazon doing? And then I got to run. Amazon, not quite all-time highs, but getting there. All right, guys, I'm going to get out of here. Market's doing pretty good today. We got a lot of the Chinese names coming back a little bit. Not a lot, but a little bit. And some very healthy names doing some very normalized, healthy action. So market's healthy. Nothing's wrong. Economy's good. China will still make our crap for us. No one worry about that. There's 9. Not looking very good. All right, guys, I'm going to get out of here. Have a good one.